All right, Robinhood Portfolio, episode 26. Today, the portfolio is down $27, and in the after hours, I'm down 75 cents. We're going to talk about the markets in general, guys. We're going to talk about what exactly happened on that dip towards the end of the market trading day. And as we can see, so the portfolio starts off in the pre-market. We're up $14. It instantly jumps up to $46 due to volatility when the market opens. And then it sort of just has a steady approach throughout the day. It really doesn't go up. It doesn't really go down. And then after that, we reach towards the end of the day. And then the market my portfolio certainly goes on a nosedive. So we're going to talk about what exactly happened during that nosedive. The Fed minutes released a statement saying that they were going to raise interest rates of about, I think it was about 0.25% or something like that. And in general, the market didn't like that. Anytime the Fed does this and, interest rates are going up, people aren't going to like that. So interest rates in general, anytime interest rates in general goes up, that's not a good thing. I mean, we think about interest rates on your student loans or something like that, or interest rates when you're trying to take out a loan and you have to. You really can't because or how about this? How about when you like a car interest rates? When you talk about having to pay back so much money if the interest rate keeps rising. So anything with the ideal of interest rates rising is going to really just not sit well with people, and that's what happened. That's what happened. Investors saw that the Fed hiked their interest rates, and the portfolio went down, and the portfolio started tanking, and in general, everything went down. So we're going to talk about what's going on with my portfolio. There have been a lot of changes with this portfolio. Let's take a look at the week, guys. We're up $49. Probably would have been up more than that. The portfolio reached an all-time high of about, I'm trying to get the graph here. There we go. So 315 was the all-time high until that interest rates hike set in, and everybody started freaking out and everybody started selling. So $49 this past week, past month $174, and for the past 3 months $1,204. So that's not too bad. The portfolio starting to go through volatility again. There's been a lot of news. There's been turf news. There's been everything. The investors are watching. Investors are not just sitting on the sidelines and letting the computers do the work. There's volatility in the markets. People are looking at what's going on in the White House. They're looking at what the government is doing. Is the government going to shut down? Blah blah blah. This and that. So investors are looking closely and they make their trades based off those decisions. My portfolio has been changed a lot. There's certain sectors that I've cut out of this portfolio, and I'm going to talk about that later. But right now, we're really just going to get into the bulk of my portfolio, and you guys going to really see what changes I have done. So let's get to it. As you can see, I'm just scrolling down here. There's still 10 stocks into my portfolio, but you guys see some new stocks like Alibaba. You guys see stuff like, Microsoft's back, MasterCard is in the portfolio now. And, most people say, hey, you got Visa too. So Visa and MasterCard, what's going on there? So let's go on ahead and talk about why I made these changes. It's September and I have a goal. I've mentioned this before in my recent Robinhood portfolio videos that I want to try to get this portfolio to $20,000. Well, I evaluated the stocks in my previous portfolios, and it was really in my previous portfolios I really had something good going. I think stocks that were cut out of this portfolio were Verizon, stuff like NextEra Energy. NextEra Energy is actually on a really bad dip right now. That would be a good buying opportunity. I think I sold around $168. So I actually took a loss on that because my average cost was $169, but I moved that money elsewhere. So what I'm trying to do is get this portfolio to $20,000. And then when I was evaluating my stocks from the previous video, I don't think I'm going to reach it, guys. I don't think I'm going to reach it unless I make some more moves and start putting some more growth stocks in really just getting ahead of the ball here and cutting out some certain sectors that, they're not really bullish at this point in time. So, stuff like, telecom is not a bullish sector. Most telecom stocks are buy and hold. So people buy and hold the telecom stocks and get the amazing dividends. And it's, dividends is not something I'm really too concerned about, especially with this portfolio, because as you can see, I kept all three dividend aristocrats, 3M, Johnson & Johnson, and Procter & Gamble, right there. Those are three dividend aristocrats that pay, their dividends are, I would say, are probably some of the hardest dividends to beat in this market. Like, not many companies can beat what 3M, Johnson & Johnson, and Procter & Gamble bring to the table. They've been paying the dividends forever. So, I still have Shell. There's their energy stock. They're trending back, but they pay a pretty solid dividend of 94 cents. So that's $14 right there. So dividends is not the problem with my portfolio, and I really, if as much as I like dividends, I need to keep this portfolio sort of on the right road, if that makes any sense. And I had money sitting in Verizon. I needed to move that money around. I need to start putting some money into some of these growing stocks that they don't dip much. They really have a lot of potential to keep going up, even when there's a crisis happening, or the Fed increases interest rates or whatnot, and this and that. So, I made some moves. I still kept, I needed a retail stock. I wanted an e-commerce stock. And, even with the tariffs, Alibaba's in my portfolio. So we're going to talk about, we look at Apple, we look at 3M, Johnson & Johnson, Procter & Gamble, Shell Company. We look at these. I'm not going to talk about these stocks because everybody knows them. Everybody sees what they're about. Everybody knows why I invested in these companies. They are really just solid buy and holds. Even these companies that are buy and holds, Verizon. I got rid of Verizon because I thought that I needed more growth stocks. I think the setup that I have right now could probably push this portfolio closer to my goals. That's the reason why I made these changes. But let's talk about Alibaba here. Alibaba has been really hit hard by the tariffs by Trump. Trump has announced tariffs sometime back, and he's been announcing tariffs just pretty much throughout the last couple of months. There's been just scares of tariffs and the trade war and this and that, and everybody's selling off the China stocks. They're selling off the Chinese stocks, stocks like JD, Alibaba. I think it was I think IQ maybe. I think maybe they're a Chinese stock. I haven't really done any. The only Chinese stock I like, and I'm being dead serious. The only Chinese stock I like is Alibaba because they're an e-commerce giant in China, and they have they have that retail aurora about them, as far as being that China of Amazon. And I really don't like to use that term, but it's really the closest term that I can use to describe Alibaba. They really are essentially the China of Amazon. They are a retail giant. They have a great system in cloud, and they are just doing so much work. I know Jack Ma recently stepped down, and that may have caused. I don't even think that really caused like a lot of concerns for investors, because Alibaba has a very good long-term vision as far as keeping the cloud space and the e-commerce giant rolling. So. They're trying to be the next Amazon. They're trying to be like Amazon. They're trying to do all they can to just buy up everything, and they really are a really good stock that I've been watching throughout these last couple of, I would say about the last couple of months. I've been watching Alibaba, and I'm just gonna go. I'm scrolling down, and you guys see what I've been doing. I actually bought lower than that. Actually, I've been in and out of Alibaba. Market sell 156, and then I bought back into Alibaba at 161. So I've been trading Alibaba. I've been doing all kinds of stuff. I've been taking losses with Alibaba. I've been jumping in and out, but this time I think I'm just going to jump in and I'm just going to keep it, because they bring so much to my portfolio. They bring a retail stock that's a retail giant. And even though, it's with the tariffs and the trading war, I need that exposure internationally. I need that exposure for China and getting into their market. And, some people might say, hey, I don't trust I don't trust their accounting. I don't trust their earnings reports. I don't trust this and that. But I can say for certain that Alibaba is here to stay, guys. This stock really is in the next 12 years, this stock can potentially be probably as big as Amazon, probably, if not more. And I know that's a big claim, but they have the potential to do it as long as they keep doing what they're doing and they keep spreading out into all these industries. And we know about the retail, we know about the cloud space, but they are really a stock that has been on sale. And I could not ignore these prices anymore. So I'm jumping into Alibaba. I'm jumping out of Alibaba. I'm trying to make money. And this time I bought in at 161. I really like that 161 or 160 average cost. I know it got lower than that, and I think people swooped up those shares when it got around to about $152 or about $158. But this is time, guys. This might be the last time to jump into a stock like this. Even the analysis ratings say that this is a buy. I don't generally go off by analysis ratings, but yeah, I see the potential. I do see the potential. It's the only Chinese stock that I like coming out of China, a retail giant that has the potential to be the next Amazon. So that's the reason why I play Alibaba in my portfolio. They definitely have a long-term mindset as far as keeping this portfolio in the right direction. So MasterCard, let's talk about MasterCard for a second here. I know they actually had a good day before the interest rates announcement, and then they took a nosedive like all the other stocks. But MasterCard is interesting because, again, they are a growth stock like Visa, and they have tons of potential to keep growing and keep pushing the portfolio forward instead of backward. And that's what I like to see, and that's the reason why I bought 5 shares of MasterCard. Now, I know that's pretty risky. I know people are saying, they're buying into the high, and this could, go south quickly at any time. When you buy into the high like this, you want to try to buy stocks on the dip. But I could not wait, guys. I'm not going to sit away and watch MasterCard just keep spiking up and up. I got into MasterCard when it was around the 160s. The 160s, I think. Let's take a look at my buying and selling and all this other stuff. So yeah, around the 160s, I was getting into this stock, and I should have held. I should have held. I would have been up tremendous amount of money if I just held into those stocks. But it's growing. It's growing. It's pretty much like Visa in the sense that this graph here is just absolutely ridiculous. Like this is probably the best graph I've ever seen. Like in the market right now. Like you try compare this graph to any other graph that I've not. I think this graph is even better than Amazon. Like I know Amazon makes more money, and the stock is expensive, but look at this. This is barely any dips. This thing is not dipping at all. This thing is just growing, and I love to see graphs like this because that means that the money is very real here. This is barely any dips. Look at this, just up. There's maybe a slight dip, right? Not even right there. I thought that would look like a dip, but no, that's not even a dip. This thing is just a straight path up, guys. I threw some money in this. I feel confident with I keep saying Microsoft. I get ready to say Microsoft. I actually put Microsoft in my portfolio, but MasterCard is definitely no joke. Like they are another Visa. They are great. They're back sort of like a tech financial stock, just like Visa, but they have tons and tons of potential. I actually think MasterCard is a better grower than Visa. I know Visa right now is at all-time highs as well, and I know their graph looks pretty good, but Visa and MasterCard, tag teaming together, keeping the portfolio, in the right track. This is the reason why, guys, I got rid of Verizon. This is the reason why I got rid of stocks like NextEra, because I need growers. I need stuff to keep pushing this portfolio in the right direction. And I know it's unrealistic. I know that a portfolio is not going to keep going up It's not going to keep spiking up, and you're not going to keep just getting, hundreds of dollars every single day. That's not what I'm looking for. What I want is something that is steady, something that I know is just going to keep on growing, guys. I don't need any more dividend aristocrats or dividend kings and all this other stuff. I already have 3 of them. 3M, Johnson & Johnson, Procter & Gamble. Shell's putting in work, and Starbucks is increasing their dividend. What more do you want? I don't need any more dividends. And then we take a look at a stock like Microsoft, which I put back into my portfolio here. And I know in the last video I talked about esports. I said that esports is getting bigger and they are growing at a rapid rate. That's the reason why I had Take-Two Interactive in my portfolio. I ended up selling Take-Two because it got real high. So I took the money. I've said this before in other videos that I'm no stranger to selling when stocks get high, and I take the money and I put that money to work elsewhere. But Take-Two Interactive sold. I sold Take-Two because I think it got up to like $137, and my average cost was like $132 or $131. It was somewhere around there. But so I'm bullish on esports. I need a stock that's gonna, that's into the esports market. That they work with video games, the Xbox and all this other stuff. Microsoft is a good stock. It's a good stock. Or another stock that barely dips. This is another graph here that is just a straight run up. And most people say, so what are you doing? Are you trading on? Are you looking at the graph and you're just trading because of the graph? Well, not exactly. No, I'm not trading because I just look at the graph. I'm trading based off the fundamentals. Microsoft is a stock that is growing. They're really just leading the industry leader in cloud space. I know I talked about Alibaba, how they're getting into the cloud, but Microsoft has so much technology that offices need right now. I need, in order to do my job at work, I have to use Microsoft products. In the story, I need Excel, I need Word, I need Access, I need all that stuff, and they are the industry leaders when it comes to cloud space. So, Microsoft, back into my portfolio, 15 shares. You're buying into the high. So I look and see what happens when you buy into the high, and you're buying a stock that's sky high, where you're gonna take a short-term loss, guys. You're gonna take a short-term loss, minus $9 already. 15 shares at an average cost of 114. The high for this stock is 52-week high is 115. So this is very, very high. And yes, it is a risk. It's a risk, but you know what? It's a risk that I like. There's a difference between having a risk and having a calculated risk. This is a calculated risk because I know what Microsoft is capable of. I've seen Microsoft. I use the products. I know the market cap. I've seen what they can do. They pay a dividend. I've done the research. I've done all my homework. I've done all the research, all the things that I needed to do to put a $1,700 into Microsoft and not worry about buying into the high. Same thing with MasterCard. Same thing with Alibaba. Even then, with Alibaba, I didn't buy into the high. I know a lot of people jumped into Alibaba when it was around $175 and it kept on going down. No one really knows where the bottom is. No one knows. No one knows where the bottom is, guys. So you think that you're buying into the bottom and you're thinking that the bottom is at $161 and $160 and it keeps on going down. It keeps on going down. And then what do you do then? Do you sell off and you take the loss and put that money to work elsewhere, or do you try again? Well, that's the thing. No one knows where the bottom is. I've lost money with Alibaba. I have. I've lost $50 here. I've lost maybe like $30 there. And then look at my average cost now. So now stock is going back up. Total return $36. The stock is going back up, and then it can go back down tomorrow. So the stock market is very volatile. Every single day, the stock is not going to go up. There's going to be something that causes a dip. It's going to be tourists. They're going to be, trade war announcements and this and that. And investors are going to lose their minds and they're going to trade off their emotions. They're not trading off the fundamentals. They're not trading off a 12-year plan. They're not trading. The investors that are selling are short-term minded. They're short term. They're thinking that, hey, I want to make a quick buck. I want to maybe sell Alibaba at an average cost of maybe about 152. I'm going to sell it at 160. That's what they're thinking. They're not thinking about like an Amazon. When I buy Amazon at $1,000 and then sell it at $2,000, they're not thinking like that. They're gonna sell that Amazon stock around 1,100, 1,200. So that's the thing, guys. You have to just have a long-term mindset, and you have to be patient because that's the reason why this portfolio is the way it is. Because I feel like this portfolio has a lot more potential to grow long-term than the previous portfolios and the previous portfolios in my Robinhood video, my Robinhood portfolio videos. So Next Era Energy out, Verizon out. Microsoft in, Microsoft, MasterCard, Alibaba in. Those stocks are going to grow as long as I hold on to them long term. I have plenty of faith that Microsoft and MasterCard are going to grow immediately because they're growing right now. Alibaba, once the trade wars, here's the thing. The trade war, we know that the trade war is a problem. We know that no one wins. No one wins when we're talking about a trade war. Now, the trade war, one thing that we do know about the trade war is that it's going to end. That's the thing. It has to end. At some point, it's going to end. And you know what? This is what I wanted to really say in this Robinhood portfolio video. At some point, we have to trade off what we know for sure. We know that the trade war is going to end, but where are we going to buy the stock when the trade war ends? So when someone buys the stock, when they hear, oh, the trade war is over, oh, okay, let me hurry up and buy Alibaba. Yeah, here we go. Gonna buy. I'm not buying at $165. By the time the trade war is over, the stock could be very well be $200. And then you say, oh man, I should have probably bought Alibaba when bad news was coming out. So this is what I mean. Bad news, you need to turn bad news into good news. You need to stop trading off your emotions. Even then, I'm not perfect either. I'm not a perfect person. I've traded off emotions sometimes myself. I've traded off emotions, like even with Alibaba, I've sold Alibaba low, and then it jumped up the next day. But by the time you buy Alibaba, it's going to be like $180. And then you're going to be like, man, why didn't I buy it when it was $65? So that's the reason why, you buy low. You want to buy when the stock is way down here. So we're looking at 197. There's people are trading off emotions. Right there, that's where you buy. That's where you want to be at. Goes up. Oh, yeah, okay. Oh, I bought at the low, and then it goes up. Oh, it's a trade war over? No, it's not. So stock goes back down. $156. So you're thinking you're buying a hold. And this is if you know how to read graphs, you know that this is a support level. This is a good buying spot. A good buying spot to buy the stock because it reached 156 two times and it went back up. My average cost is 161, so that's a little bit more than the support level. But hey, with a stock like Alibaba, you can't go wrong with that with low average cost. You can't. So that's gonna do it, guys. $115. The portfolio reached an all-time high, $15,315. Unfortunately, due to the Fed minutes and the increase of rate hikes, the portfolio took a nosedive all the way down. And you guys, one more time, I'm just going to show my new portfolio. I'm going to show all the changes that I made. I may have made more changes, but at the top of my head, I know that Next Era Energy and Verizon are gone. They are cut from this portfolio. And MasterCard and Visa, I keep saying Visa. MasterCard, Microsoft, and Alibaba are thrown into this portfolio to keep this portfolio moving in the right direction. And Starbucks is doing its thing. I think Starbucks is trading up nicely here at $57, so $156 return. That's not bad. But let me know what you guys think, guys. This might be a little bit more riskier, on the riskier side. especially because I'm buying into the highs, and then I have a stock that's directly correlated to the trading war and how the trading war affects the stock. Every time there's tariffs with this trading war and this and that, stock has huge potential to go down. That's okay, because I know that Alibaba is a fantastic long-term. This is a no-brainer. I mean, if you're a long-term investor thinking about investing into the stock market and looking back the next 12 years, Alibaba is good to go. This definitely has the green light, at least in my opinion, it does. But yeah. So I like the portfolio way it's set up now, just to keep this portfolio on the right track. I'm gonna cut the video here, guys. Let me know what you think. Portfolio is down today. It did reach an all-time high, so the potential is definitely there to get this portfolio moving in the right direction. I haven't added any money to this portfolio in a while. I might start adding some more money and, kind of just sitting on cash, sitting on 20% cash, so I can buy the next stock that goes on sale that I like. I know Nike took a dip. They were down 2% today off that earnings report. Maybe some people started taking profits. Maybe there was like low guidance. I'm not sure what happened, but the stock was down 2%. I think Square is another stock that I'm looking at. They recently had a analysis upgrade. Actually two analysis upgrades within the past 2 weeks, and the stock has really been trending up here nicely. I've really been thinking about buying option calls for Square, but I really want to try to do that on the next dip. I don't think buying calls when the stock is at a 52-week high I don't think that makes any sense. But if I were to buy into the 52-week high, I would probably want to buy stocks and not options. So that's just me thinking and me trying to do save money and not trade options when the stock is at all-time highs. But even then, Square's a grower. They have continued to grow, and I think the analysis upgrade boosted the price target to $125 for Square. So this stock might just go to $125. I definitely want to ride that out if I can. So that's going to do it, guys. You guys, one more time, this is my new portfolio, Alibaba in. Let me know what you think, and I'll see you next time.